This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices continued to climb on Tuesday, with investors expecting a tighter market led by a seasonal rise in gasoline demand and supply cuts from OPEC Plus producers, though concerns over the risk of a U.S. debt default capped gains. Brent crude futures rose 35 cents, or 0.46%, to $76.34 a barrel by 0630 GMT, while U.S. West Texas Intermediate, WTI, crude was at $72.41 a barrel, up 36 cents, or 0.50%. It was the second day of gains after Brent rose 0.5% on Monday. WTI gained 0.6%, amid a 2.8% increase in U.S. gasoline futures ahead of the Memorial Day holiday on May 29 that traditionally marks the start of the peak summer fuel demand season.
Germany plans to earmark around €4 billion, $4.40 billion, annually to subsidize electricity prices for energy-intensive industries, to support an industrial move away from fossil fuels and discourage firms from moving offshore. The government last year introduced electricity and gas price caps to shield industry and households from rising energy prices, but companies in Germany say electricity prices are still too high. We want the industry to stay home in Germany and be given a transformation perspective. The industry electricity price is intended for this, Economy Minister Robert Habeck said in a news conference on Monday.
Moving on to the top news in the energy sector.
Turkey and ship-to-ship, STS, loadings remained the top destination for Russian diesel exports in May, while total shipments in May are set to fall because of seasonal refinery maintenance and rising domestic demand, traders said, and Refinitiv Acon data showed. Russia's offline primary oil refining capacity is expected to rise by 1.9 million tons this month from April to 4.4 million tons. Since the full EU embargo on Russian oil products went into effect on February 5, traders have diverted diesel export supplies from Russian ports to countries in Africa, Asia and the Middle East instead of Europe, which was previously the main buyer.
Portfolio investors are bearish on the outlook for petroleum but increasingly think prices for refined fuels will be somewhat stronger than crude on account of low inventories and limited amounts of spare refining capacity. Hedge funds and other money managers made no overall change in their position in the 6 most important petroleum futures and options contracts over the 7 days ending on May 16. Net sales of crude oil, minus 18 million barrels, were offset by purchases of refined fuels, plus 18 million barrels, according to position records published by ACE Futures and the U.S. Commodity Futures Trading Commission. Next, we have the top news in metal markets. Global steel demand is expected to grow by 1.7% in 2024 following a 2.3% rebound forecast for this year based on a recovery in manufacturing activity, an executive from the World Steel Association, WSA, said on Tuesday. In the long run, the Association of Southeast Asian Nations, ASEAN, is expected to see a doubling in steel demand by 2035 from 80 million tons currently, Frank Zhang, the association's deputy director general, told an industry conference. In the short term, the steel industry will focus on optimizing energy efficiency of existing facilities and maximizing steel scrap usage to reduce the carbon footprint of the industry, Zhang said.
Gold prices fell on Tuesday, pressured by a stronger dollar, as investors focused on U.S. debt ceiling talks, with this week's Federal Reserve policy minutes and economic data also on the radar. Spot gold fell 0.4% to $1,961.55 per ounce by 0700 GMT. U.S. gold futures were down 0.6% to $1,965.20. The dollar index held firm, making dollar-priced gold less attractive for overseas buyers. While a debt ceiling deal has not been reached yet, comments from House Speaker Kevin McCarthy reduced safe haven buying flows into gold, said Tim Waterer, chief market analyst at KCM Trade.
We will now look at the top news in the agricultural sector.
The European Union's crop monitoring service has raised its forecasts of this year's EU soft wheat and rapeseed yields and lowered its expectations for barley, citing abundant rain in much of the bloc and deepening drought in the Iberian Peninsula. Heavy rain and chilly temperatures have posed problems, most dramatically in flooding in northeast Italy, but the rain had generally boosted moisture reserves to favorable levels for the time of year, the Mars service said on Monday. In Spain and Portugal, however, worsening drought conditions led the crop monitor to reduce its yield projections for the country's main crops to last year's already drought-diminished levels, it said in a monthly report. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.